Hello, 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 hello. Very good evening, everyone. How are you all? Everyone fine? Super fine? Now, last class we started in day 37. We have done only the meaning of provision and the recognition criteria of provision. Up to this, any doubt? No doubt. When you say no doubt, it means there can be two reasons. Either you have understood everything or you have not done revision. Because if you will do revision, some doubt may come. So what is the reason? Have you done revision or you have not done revision? Follow. You have done revision? Points, sir. You have not done anything, only what to revise. Correct na? So you have not started only, sir. You are doing only provision, provision that to we know. From bachpan se we know provision. Correct? But chalo, ठीक है. Okay. But every day, one thing we have understood that we require revision. Follow that. It will be good for you. Now let us revise whatever we have done. So we started with the meaning of provision. Provision is the provisions are liability of uncertain amount or timing. So provisions are liability. What is the meaning of liability? Liability means present obligation arising from past event, the settlement of which is expected to the settlement of which is expected to result in outflow resource from the entity. Now we have understood the present obligations are those obligations which are probable on reporting date. When I say probable on reporting date, means chances are more than 50%. More likely than not means chances of occurrence is more than chances of non-occurrence. Then we have also understood that in this chapter obligations are of two types. One is legal obligation, one is constructive obligation, and India 37 will be applicable to legal obligation arises due to contract or due to any other act, any act. Constructive obligation arises from entity's own action. It may be derived from past practice, published policies, or specific statement, which indicate that entity will accept the responsibility and which create a valid expectation on the part of other party. This you have understood. Then we have understood that there are three conditions need to be satisfied for recognition of provision. First, there must be present obligation arising from past event. The outflow of resource which is required to settle the obligation must be probable and reliable estimation can be made. Correct. Then one special point we have done that only those obligations which exist independently from entities' future conduct of business should be recognized as provision. Any obligation which are dependent on future conduct of entities business that will not be recognized as provision. Why? Because outflow of resource will be not probable in that case. Got it? We have done some examples, also 3-4 examples we have done. However, if you see the examples, so now see this question bank, how I have designed the question bank, that also you need to understand. This is question bank, so you can see concept based examples are given. So either I take example from this concept only or I create some new example so that you can understand. So these examples are for your reference. For your reference. Understood? Hello. Hello. So what I was informing that this question bank has been designed in such a way that I have given some concept based example. So in class either I will take these examples only or I can create any new examples. But this example you can revise when you are doing self study. You can see concept based example, example number 1, example number 2 and obligating event, constructive obligation examples are given. It is quite possible that because these all examples have been taken from ICA study material. The example I have not created. All examples are created from has been taken from ICA study material. So it is quite possible that any question can be created from this example only. Directly created from this example. So of course you should refer all these examples. Then you can see this question bank. I'm just giving you an idea of question bank, how I have designed the question. Correct. So once the examples, you can see there are a lot of examples. Correct. So I will not be taking this example normally with concept. I will take this example, but I will not refer it. You need to refer this example when you are doing self study. Okay. Then you can see examples is followed by question from ICA study material. So all the questions of ICA study material is given after that. All the questions are given. Means once you have done this, you are not supposed to refer ICA study matter by your own. Understood? So all the questions has been taken from ICA study matter. Then it is followed by, let's see how many questions are there. I'm just giving a reference so that you can understand how I designed my question bank. You can see there are how many questions? 20 questions. So all the 20 questions have been taken from ICA study matter. Then I have taken some questions from other sources. I felt that yes, this type of question comes for some understanding. So this question may be from old syllabus or from international book. So I have not taken many questions, very few questions, selective questions. It can be 2 questions, it can be 5 questions, it can be 10 questions depending upon the chapter. Correct. Then it is followed by all the questions of RTP, MTP and past exam paper. As old syllabus and new syllabus are same as per the content is concerned, as per the content. Therefore, can I say RTP, MTP and exam paper of old syllabus can be taken into consideration? So all the question of this old syllabus have been taken, which have been given RTP, MTP and ICA exam. Understood? And there was one GFRS paper in the old syllabus, Global Financial Reporting Standard, which has been now deleted. So there were some questions which I have taken from that also, which may be asked in your exam. Good quality of questions were given. That also I have taken into consideration. So this question you can see 27, many questions are given. These are also important. So these are also from ICA resource only. Correct? Means from your point of view, you have done all the research. Now these questions are up to May 2023 exam. Understood? So all the questions up to that date has been covered. Now any questions after that attempt will be given as an additional PDF to you. Now any new questions created after that attempt, means suppose new RTP, that RTP any new questions came which is not a repeated question. Don't worry about that. I will only update you by way of PDF. These are the new question which has been updated in my question bank from ICA resource. So before exam, you need to refer that additional questions also has not been given in this question bank whatever you have received. Understood? You are not supposed to do any research. I will do research from your point of view. You just need to go through what? The additional paper. Correct? I think you have understood how I have designed my question bank. So this question bank is nothing but question bank taken from ICA resource only. I just given a name compiled by CH Ranjit. But actually this is question bank of what? ICA study material. Correct? With due respect to ICI, I have taken all questions from ICI only. Understood? Have been compiled by me so that it become easy for you to for your examination purpose. Correct? Yes, sir. Now, so can I say point number D? Already I have taken some example. Now you can refer that example. If you have forgotten the concept, then you can refer that example. Whatever is given, that concept is example. Then we have done one special point. All obligations involve other party, but the identification of other party is not necessary to create provision. Even though we don't know the identification, provision can be recognized. This point also you have understood. The next point is up to this we have done in the last class. Correct. Now what they are saying, legal obligation. So we have understood that obligation can be legal obligation or constructive obligation. What India 37 says that legal obligation arises only when legislation are enacted. Enacted means act has been enacted. Now you only say when the act is enacted. When any act is enacted, passed by, passed in parliament, both the houses, and signed by president and notified in official gazette of India. So once it is notified in the official gazette of India, it is enacted. So it is not yet notified means it is not yet enacted. So when I what they are saying, legal obligation arises only when legislation are enacted. This act is enacted, or it is virtually certain. It is virtually certain. So sir, what is the meaning of virtually certain? Means it is not certain but virtually certain. Virtually certain means chances are more than 95%. Chances are more than 95%. When I am saying probable, probable means chances are more than 50%. So can you say probable include virtual certainty also? When I am saying probable, the chances are more than 50%. So of course, it also includes chances are more than 95%. But when I say virtually certain, so it is not probable, but it is more than probable. It is more than probable. It becomes virtually certain. The chances are more than 95%. Understood? So it is virtually certain that by the end of reporting period, that the act will be shortly enacted. Means it is not enacted, but it is virtually certain by the end of reporting period that the act will be enacted shortly. Then also legal obligation can be recognized as provision. Have you understood this part? What you have understood? Now the question is that how we'll understand it is virtually certain? It is in India, just try to understand. If the bill has been passed in both the houses, the president is only formality in India. President is only formality. They will 100% sign it. Are you getting? So if the bill has been passed in both the houses, so can I say it become virtually certain that the act will be enacted even though it is not notified in what? Official gazette. It is quite possible that bill has been passed but not enacted by the end of reporting period, but now it becomes virtually certain that it will be enacted within a short period of time. Within a short period of time. Then also provision can be recognized. Let me take one example. Everyone. Let me take one example. Means you have understood, but whether you have understood or not, that I need to explain. Correct? Sometimes we think that we have understood, but actually we have not understood. From examination point of view. Correct? So till you understand, don't say yes. Don't say yes. So let me take one example for legal obligation. Suppose this is what 31st March. 31st March 2023. Correct? Understood? And suppose entity is polluting environment. Correct? Understood? Now what happened? Case 1. Case 1. Are you able to understand? I am giving you some case. Case 1. Now, one act is enacted on or before 31st March 2023 to clean what? Clean up the environment. Have you understood this point? Means any entity who is polluting the environment, act has been enacted before what 31st March to clean up the environment. So there is a legal obligation or not? Yes. So yes, there is a legal obligation. So what is the conclusion for this? Provision is required if all other conditions are satisfied. Means first condition is satisfied, there is a legal obligation arising from past event. But there are two more conditions. If that two more condition is satisfied, then yes, provision is required. I hope you have understood. Case number 2. Situation number 2. Act is not yet enacted. Understood? But it is virtually certain on 31st March that it will be enacted within a short period of time. Have you understood this point? Within a short period of time. So it is not yet enacted, but it is virtually certain that it will be enacted within a short period of time, and that virtual certainty was on 31st March. Now you say whether provision should be required, whether will create provision. Yes, provision is required. Provision is required. Case number 3. Act is neither enacted nor it is virtually certain that it will be enacted. Understood? However, entity has a constructive obligation to clean up the environment. Have you understood this point? So there is no legal obligation, but entity has a constructive obligation on 31st March to clean up the environment either by way of published policy or specific announcement, or by what? Past practice. Whether provision is required. Provision is required or not required? Bolo? Provision is required, na? Provision is required. Correct. Case 4. Correct. There is neither legal obligation nor what? Nor constructive obligation. Obligation on which date? On 31st March. Whether provision is required? Bolo? Provision is not required. Have you understood? So I have discussed all the 3 cases. 4 cases actually. Understood? Correct. So I hope now it gives a better idea. Means when I have read the para, you have understood. But with example, more clarification. Now any type of question you can do in exam. Understood? This is the objective, to give you all the information so that you can react in exam hall. Correct? Yes, sir. With this we completed what? Provision. Meaning and recognition criteria. What is the meaning of provision you have understood? What is the recognition criteria for provision that you understood? Now let us come to what? Contingent liability. Now let us come to contingent liability. Now we have understood that we are discussing about obligation. Obligation now. Which obligation? Obligation arising from past event. Past event. And this obligation can be either legal obligation or it can be constructive obligation. It can be constructive obligation. In this chapter we are discussing about what? Obligation only. Correct na? Understood. Now we have understood that obligation can be present obligation. It can be present obligation. Correct. Now it can be also possible obligation. It can be also possible obligation. You come in your life, and it can be also what? Remote obligation. Remote obligation. Understood. Now what is this all we need to discuss? The present obligation, so we have understood. When I say present obligation means it's more likely than not. MLTN. MLTN means what? More likely than not. Means chances are more than 50%. Correct. Chances are more than 50%. When I say remote obligation, it means insignificant chances. When I say remote obligation, it means insignificant. Insignificant means chances are less than 5%, we can say. Chances are less than 5%. Chances are less than 5%. Now we all know that we always think about materiality. When chances are less than 5%, so can I say it become very immaterial information. And whenever it is an immaterial information, that should not be taken into consideration for accounting treatment. And therefore, India 37 says that no treatment required. For this, no treatment required. No treatment required. Because of which concept? Due to materiality, na? Are you able to understand what I am saying? Due to materiality concept. Correct. So obligation from examination point of view can be present obligation, possible obligation, remote obligation. Remote obligation, no treatment required. Present obligation. If there is a present obligation arising from past event, then what you will do? No, no, no. Till now you have not understood. This is only first condition. There are two more conditions need to be satisfied. Now you are at CA final level. Give correct answer. I already said that best answer will be given marks. So you said present obligation provision means 0 mark. Correct? It means with present obligation, there are two more conditions that we need to understand. First is, can I say outflow must be probable. Outflow is probable. Correct? And what? Reliable estimation can be made. Can be made. Understood this point? So can I say with this, if I am saying yes, this condition is also satisfied and this condition is also satisfied, then we recognize what? Then we recognize what? Bolo? Then recognize provision. Then recognize provision. Have you understood this point? The present obligation arising from past event and outflow of resources probable and reliable estimation can be made, then provision should be recognized. Or can I say in this way, if there is a present obligation, but either this is not satisfied or this is not satisfied or both are not satisfied, quite possible. Means either of these conditions are not satisfied, then we cannot recognize provision. Then what India 37 says, disclose it as what? Disclose it as what? Contingent liability. Have you understood this point? Disclose it as contingent liability. Correct. And to, to have understood that any present obligation arising from past event for which either outflow of resource is not probable or estimation cannot be made, that cannot be recognized as provision. So that will become what? Contingent liability. So all present obligations are not provision. There are some present obligations which can be what? Contingent liability also. Correct. This you have understood. So what is possible obligation? So a possible obligation is in between what? Present and remote obligation. So it is, can I say it is nothing but not more likely than not, not more likely than not. Means can I say it is less than what? 50% and more than what? 5%. We can say in this way, which is less than, which is less than 50%, more than 5%. Correct? Understood. So in this case, always it will be what? A contingent liability. It will be always a contingent liability. Have you understood? Means any possible obligation arising from past event will be always what? Contingent liability. This much have you understood? Means if you have understood this, can I say from this you can derive the meaning of contingent liability? Let us derive the meaning of contingent liability, whatever is given under India 37 without looking at India 37. So can I say in this way? Contingent liability are present obligation arising from past event which cannot be recognized as provision. Why? Because either outflow of resource which is required to settle the obligation is not probable, or reliable estimation cannot be made, or it is a possible obligation arising from past event. Understood? Can you repeat? Contingent liabilities are present obligation arising from past event which cannot be recognized as provision because either outflow of resource is not probable, or reliable estimation cannot be made, or these are possible obligation arising from past event. Done? Have you understood? Correct. Please let us come to definition. Now you will understand this definition: contingent liability. Contingent liability. You can see contingent liabilities are present obligation from past event which cannot be recognized, as provision only, because we recognize in this chapter provision only, cannot be recognized, which cannot be recorded, because either outflow of resource to settle the obligation is not probable, or reliable estimation cannot be, or these are possible obligation arising from past event. If you write down this much, over. Let us read entire definition. So these are possible obligation arising from past event, the existence of which will be confirmed by the occurrence or non-occurrence of uncertain future event which is not within the control of entity. Means if you can memorize, okay. If you can't memorize, then also if you write down this much, now you'll get marks. Understood? So it is possible application arising from past event, the existence of which will be confirmed only by the occurrence or non-occurrence of uncertain future event which is not wholly within the control of entity. Can you say you can memorize? Once you have understood the concept, you can memorize the definition. But when you have not understood the concept, you can't memorize. You can memorize, but it will be forgotten within a span of time. I hope you have understood. Meaning you have understood. Have you understood? Now just try to understand what I am saying. Everyone. If I say present obligation, if it can be measured, so it will be what? Present obligation, if it can be measured. Let us assume outflow of resources is probable. So any present obligation, if it can be measured, it is a provision. Any present obligation which cannot be measured, it is what? Any present obligation which cannot be measured, it will become what? Contingent liability. Any possible obligation which can be measured, it will what? Contingent liability. Any possible obligation which cannot be measured, contingent liability. Very good, very good. Means you have understood the emotions. You have understood. Means can I say this possible obligation will be contingent liability, whether it can be measured or it cannot be measured. Correct? So measured, then okay, or cannot be measured, then also what? It will be a contingent liability. Understood? Have you understood this point? Have you understood this point? Any doubt? No doubt? No doubt? Simple? Simple? Correct. Now what they are saying, just try to understand. Recognition. So of course, can I say contingent liability will never be recognized? It will be only disclosed in financial statement. So when we say it will be disclosed in financial statement, so financial statement it will be disclosed where? In notes to account. So when I say disclose in financial notes to account is a part of financial statement. There we give all the disclosure. Correct? So not recognized but require disclosure in financial statement. So when I say disclosure in financial statement, that is what? That is notes financial statement. Understood? Notes to financial statement. Unless outflow of resource is removed. Means if outflow of resource is removed, then no treatment required because once again it become immaterial. Once again it become immaterial. Understood? Once again it become immaterial. Means just try to understand what they want to say. If I am saying obligation. So we have understood it can be present obligation. Now present obligation, if I am saying outflow is probable. So it is a provision. Let us assume estimation can be made. Let us assume estimation can be made. Okay. So the present obligation outflow is probable. It is a provision of contingent liability. Provision. Correct now. If I am saying outflow resource is not probable, then what? Then it will become contingent liability. And outflow resource is remote then what? No treatment. Then no treatment. When I am saying possible obligation. Now once again we'll think about outflow. Outflow na? Now outflow is probable. Outflow is probable, but it will be what? Contingent liability. You have understood. Outflow is not probable. Then what? Not probable means less than 50%, but more than 5%. Then it will be what? Then also contingent liability. But if it is remote, then what? No treatment. Now when I am saying remote obligation, then the no treatment only. When obligation is remote, then the question of outflow will not arise. Then no treatment. I hope you have understood this point. Have you understood? What they want to say, it will be disclosed unless the outflow is removed. If the outflow is removed, then no treatment is required. Got it? This much also you have understood. It means contingent liability you have understood. Contingent liability you have understood. Meaning you have understood. Disclosure part also you have understood. Now let us come to contingent asset. What they are saying about contingent asset. Right now we are doing only meaning. Contingent asset. So contingent asset means inflow. Inflow means what? Asset. So it become a possible asset. So contingent asset are possible asset. Contingent asset are possible asset. Correct? Arising from past event. Arising from past event. The existence of which will be confirmed by occurrence or non-occurrence of uncertain future events which are not within the control of entity. Same thing. So these are possible assets, the existence of which will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events which are not within the control of entity. Very simple. Very simple. So these are possible assets. These are possible assets. Understood? So you can see for contingent asset means for asset either it will be asset or contingent asset. But for liability, it will be liability or provision or contingent liability. But provisions are also liability. Provisions are also liability. Means when we are into obligation, they have said present obligation and possible obligation. But we are into asset, so for contingent asset, they have said only what possible asset. They have said only possible asset. Are you getting what I am saying? Have you understood? Means Now, what will be the accounting treatment? What they want to say about accounting treatment is recognition and disclosure. What they are saying, whenever there is a possible asset, we will think about inflow. Because whenever there is an obligation, we are thinking about outflow. So asset means what? Inflow. So what they are saying, if inflows are virtually certain, virtually certain means what? When chances are more than 95%. So virtually certain does not mean certain. If it is certain, then it is an asset only. So when it is a virtually certain, so what they want to say that it is not a contingent asset, it is an asset and recognize such asset. Are you able to understand? So it shall be recognized as an asset. It is not treated as contingent asset. Because when you are saying contingent asset, then it will not be recognized. So what they want to say, if the inflows are virtually certain, even though they are not certain, then also it will be recognized as a asset. Let me take one very simple example which you are doing from Bachpan. Now suppose you have done some credit sales. What journal entry you have done? You have done one journal entry बचपन में debtor account debit to sales ना. Debtor is an asset or liability? Means you have recognized an asset. So you have recognized as an asset. But my question to you all, from this debtor, the inflows are certain or not certain? The inflows are certain or not certain? Means inflows are certain or uncertain? Certain. How can you say certain? The credit sales na. How can you say certain? Then why you create provision for doubtful debt? How can you say certain? Just try to understand. What is my question? Try to understand what I am asking. You have done some credit sales. Now I am asking one question. Whether inflows are certain. What is your answer? Answer is no, na. Answer is no. Arey bolna re. It is not 100% certain. When I am saying certain means 100% certain. Now if I ask another question, whether it is uncertain, then also you will say no. Am I right or not? Because can I say credit sales is done to known customer and you know the financial capability of that person, and therefore you have done credit sales. You will not do credit sales to any unknown party which are not financially capable. Are you able to understand? But you can't say it is certain. But can I say it is virtually certain? It is virtually certain. Means can I say debtor in your Bachpan means CA foundation you have recognized because inflow is virtually certain. But inflows are not certain. So already from Bachpan we are recognizing such asset. From Bachpan we are recognizing such asset or not. So can I say simple clear point? You can't say sir why we are recognizing. I will say from Bachpan from CA Bachpan means CA foundation. From CA foundation you are recognizing debtor account debit sales. Have you understood this point? So what they are saying, if the inflows are virtually certain, then it is not a contingent asset, it is an asset and recognize it. Then if inflows are probable means more than 50%, but now in this case less than what? 95%. So if inflows are probable, so more than 50% but less than 95%, then it will become a contingent asset. It is not an asset, it is a contingent asset and will not recognize contingent asset, means will not record in our books of account. So such contingent asset will be disclosed where? In financial statement. So such contingent asset will be disclosed in the financial statement. However, AS29 if you remember, AS29 used to say disclosure be done where? Disclosure. AS29 used to say disclosure will be done where? In the report of approving authority. This is in director's report. If you remember, I know you don't remember this point, but I need to give difference also, na? So as per AS29, such contingent asset required disclosure in report of approving authority means director's report. Yeah, director's report is not a part of financial. Whatever you want to disclose there. Can I say when I am saying AS or Ind AS, AS and Ind AS is for what? Financial statement. So whether it should be disclosed in financial statement, that is important. Whatever you want to disclose in director's report, disclose now. So AS and Ind AS should not give any importance to director's report. And users will never take any decision based on what? Director's report. They will take decision based on audited financial statement. So that point is Bakwas point and therefore remove. Disclosure means what? Always in financial statement. And now India 37 says that such contingent asset can be disclosed where? In financial statement in notes to account. However, AS 29 say no. No disclosure in financial statement. Disclosure where? In report of approving authority. Understood? Correct? Yes, sir. So whether this AS29 is in our syllabus? No, AS29 is not in our syllabus. But can I say I am just giving some extra information so that once you become CA, you know about this difference. Are you able to understand? However, read ICA study matter, they have given the difference in ICA study matter. But from my point of view, they will not ask question. But now because they are giving MCQs, such type of question can be asked. In MCQs, so such type of question can be asked. So we don't know what is the scope till now because till now MCQs has not been given by ICI. I hope you are understanding. Correct? So I will teach you everything whatever is given in ICA study matter. Don't worry, don't write anything because if you see at the end the difference is given. Whatever I'm writing, that only you write. So difference is given. So unnecessary, you are wasting your time. I said whatever I write, that only you write. Why you write extra? Write whatever I don't write. Whatever, but what I write, you don't write. No, no, no. Arre, chalo, theek. Got it. This also you have understood. But if it is not probable, if inflows are not probable, means chances are less than 50%, then no treatment. Means can I say, if I am saying the inflows are not probable, just try to understand. If I am saying inflows are not probable, are you able to understand what I am saying? If the inflows are not probable, then it will include remote also. It will include remote. So normally for outflow, whenever whenever outflows are remote, no treatment. But here, even though inflows are not probable, no treatment. Means can I say India is for asset, and that is nothing but conservatism principle. That is nothing but conservatism principle. We are strict for recognition of our expected income. Understood? So it means India is also strict for recognition of asset and disclosure of asset. Got it? Yes, sir. Noted. Now, if I give a summary of outflow and inflow, whatever we have understood. So can I say outflow inflow? Now, if it is 100% certain, 100% certain, so outflow is a liability and inflow is an asset. If it is more than 95%, so can I say it become virtually certain? It become virtually certain. Virtually certain. So can I say even though it is virtually certain, as per India 37, we recognize provision, and provision is nothing but a liability. Provision is nothing but a liability. So we'll give a name provision, but it is a liability only. And in case of inflow, it is an asset. In case of inflow, it is an asset. Understood? Correct. Now, if it is more than 50% but less than 95%, means we can say probable. We can say probable. It is probable. So if the outflows are probable, then also we recognize provision, which is nothing but liability. We can say provision liability. But if inflows are probable, then we'll not recognize the asset. We'll disclose what? Contingent asset. It will become contingent asset. Then, if it is less than 50% and more than 5%, so can I say it become not probable? Not probable. Then for outflow, it become contingent liability. But for inflow, it is no treatment. You can see it become contingent liability, here no treatment. Then last, less than 5% means remote. Remote, correct? In this case, no treatment, no treatment. So you can see for inflow, India is more strict for recognition. Understood? Summary you understood. With this, we completed the meaning. Meaning we have understood. Any doubt? Meaning we have understood. Correct. Now, if you have understood meaning, then we can go to measurement. So can I say we have understood the meaning of provision, we have understood meaning of contingent liability, we have understood meaning of contingent asset. Yes, sir. Now let us come to what? Measurement. Measurement of provision and contingent liability. Can I say contingent liability also require measurement? Because when you are disclosing contingent liability, you should disclose the amount of that what? Liability. Understood? Amount of that contingent liability. Correct? So what they want to say? whatever measurement you are doing, that measurement should be best estimate. So it should be a best estimate. Now we need to understand how to make such a best estimate. That is one point of discussion. But whatever measurement you are doing, that should be best estimate. Of what? Of expenditure means future expenditure, which is required to settle the obligation at the end of what? Reporting date. This measurement should be best estimate of future expenditure, which is required to settle the obligation as on reporting date. Have you understood? Let me understand whether you have understood or not. Okay. Just try to understand. Suppose this is 31st March, this is reporting date, and you have a present obligation. You have a present obligation as on this date. And let us assume all three conditions are satisfied. So you need to recognize what? You need to recognize provision as on this date. But you need to estimate the amount. You need to estimate the amount as well as timing. Suppose you estimated that obligation is settled after 3 years. This is phi 1, phi 2, phi 3. So this is also one estimation. Obligation is required to be settled after 3 years. And the amount of settlement will be 10 lakh. Suppose this is the estimation done. Now don't ask me the question how 10 lakh. That will be decided by management. Best estimate. Suppose you have done the estimation and you have estimated this obligation settled after 3 years, and the amount of settlement will be 10 lakh. My question to you, what will be the amount of provision? What will be the amount of provision as on 31st March? Excellent, excellent, very good. Can I say it will be present value of what? Present value of 10 lakh. Now you all know what is present value, huh? That I am not teaching you. You know about time value of money? You have done one chapter, time value of money in FM. Present value, future value. So it should be present value of what? Future expenditure. Then only that will be the expenditure which is required to settle the obligation as on which date? As on 31st March. Understood? However, AS29 was silent about discounted amount. AS29 used to say undiscounted amount, but Ind AS 37 says discounted amount. Have you understood this point? Correct. So can you say when they are saying as on reporting date, it means what? It means what? The amount of provision shall be present value of expenditure. Present value of expenditure. Are you able to understand? Amount of expenditure, amount of provision shall be the present value of that expenditure. Present value of that expenditure. If the time value of money is material. If the time value of money is material. Now, the time value of money is material. Yes, this is one subjective materiality is subjective term, na? Whether time value of money is material or not material, that will depend upon the information given in the question. However, from examination point of view, we can say if the amount is payable after 1 year, then of course time value of money is material. If the amount is payable within 1 year, then can time value of money may not be material. Are you able to understand? Suppose the amount is payable within 3 months, it is immaterial. But if it is payable after 1 year, the time value of money may be material. But from exam point of view, if the discount rate is given, it means they require what? Discounting. Discount rate is not given, then of course you can't discount it, na? So from exam point of view, don't worry, they will give some information from which we can understand whether we require discounted amount or undiscounted amount. But I hope you have understood amount of provisions shall be present value of future expenditure. Future expenditure if time value of money is material. This much you understood? This much you understood? So can you say you have understood best estimate of expenditure? Now the question arises, how will do such estimation? So when the estimation will best estimate, can you say nothing? It will depend upon management judgment. Means we should rely on management judgment only. So whatever estimation has been done, estimation are determined by management judgment. Management judgment, and we should rely on them because can I say they can understand the situation very well. So it should be based on management judgment, but supported by some evidence. It should be supported by some evidence now. Of course, we'll take management judgment, but as an auditor, you'll ask many questions how you are taking that judgment. And as per Ind AS 1, till now we have not done Ind AS 1. Ind AS 1 says that all the assumption and all the judgment whatever you are taking should be disclosed. So any judgment taken by management should be also disclosed. It should be supported by some evidence. So what they are saying, it need to be supported by, experience of past transaction. Experience of past transaction. For example, in last class, I have done one announcement that any student who scored 90 or more than 90, I will refund 50% of fees. That was one announcement. Correct now. So how to calculate the amount of provision? So can you say, I'll go to the last batches. I'll count number of students. Suppose number of students last batch was 100 and 5 students scored 90 or more than 90. So it becomes 5%. So 5% student might require refund. So now I'll count what number of students in this batch and I will calculate what 5% and the amount of refund. So can you see it based on the past transaction, past experience? It should be supported by experience of past transaction, or it should be supported by report of an expert. It should be supported by a report of an expert. These experts are not chartered accountants. We chartered accountants are not expert in estimation. We CA are not expert in estimation. Correct, ma? CA can be also expert, but always CAs are not expert. There are some other people who may be expert. That expert can be internal expert, it can be external party. It should be based on some report given by an expert, which can be internal person, which can be external person. Correct. Or it should be supported by any additional evidence provided by event occurring after reporting date. Can I say nothing but this is AS4? Now AS4 become Ind AS 10. So it should be supported by any additional evidence provided by event occurring after reporting date. Nothing but AS4. You have done AS4. We'll do after this Ind AS 10 only. So this point I will discuss where? Under Ind AS 10. So to sum up what I want to say, the best estimate should be as per management judgment, which should be supported by what? Either past transaction, experience of past transaction, or report of an expert, or additional evidence provided by event occurring after reporting. So we have understood this. But sir, how to measure the amount? How to measure the amount? So what they are saying, how to measure the amount? How to measure the amount? Can I say this is important from examination point of view? This is important from examination point. How to measure? What they want to say, when obligation involve large population. When obligation involve large population. Right now when I have announced the refund, so it is for one student or large population. Large population, can I say one-to-one provision we cannot create. One-to-one provision we cannot create. Will die. So it means in my announcement, whatever announcement I have done, it for large population, large number of students, large number of students. Understood? And in 1 year, I will not take one batch now. There will be different batch. There will be different batch which I am taking. Not only CA final batch, there are CA inter batch also, CA foundation batch also. Understood? So when obligation involve large population, so what they want to say? Determine the expected value of obligation. Determine the expected value of obligation. So what is this expected value of obligation? Expected value of obligation is nothing but weighted average of all possible outcomes. Weighted average of all possible outcomes. Understood this point? Weighted average of all possible outcomes. So what is this? Let me take one example. Just try to correct. Let me take one example. Suppose during the year, this is 1 year financial year, sale has been done. And sale has been done with a warranty. Warranty. Now you know about warranty. If suppose any defect arises, so that goods can be what repaired, and that defects will arise within 1 year from the date of sale. Suppose 1 year, or it can be 2 year, or it can be 3 year. Warranty can be what? Suppose 2 year warranty has been given. 2 year warranty has been given. Correct. So when the warranty has been given, and suppose any customer come with a defect, so there is an obligation to repair such goods, and whenever there is such obligation to repair that defect, expenditure will be incurred. So there is a legal obligation because it is some contract. So of course, if all the conditions are satisfied, we should recognize the provision. So provision is required, but what will be the amount of provision now that we are discussing? It will depend upon what measurement principle? It will depend upon measurement principle. Just try to understand. Suppose during the year 1000 units has been sold. 1000 units has been sold. Correct? Now, as per the past experience, out of this 1000, 60% customer will come with no defect. There will be no defect as per past experience, and 30% will come with minor defect, quite possible, and 10% customer will come with what? Major defect. Are you able to understand? This is based on past experience only. So what management is saying that what will be the amount of outflow? What will be the amount of outflow means expenditure? As per management judgment, this is nil amount. Minor defect, they need to incur an expenditure of 1000 per unit, and major defect they need to incur an expenditure of 2000 or 3000 at a 3000 per each unit. Have you understood? So what will be the expected value of obligation? So expected value of obligation in this case, we need to find out expected value now. Expected value of obligation will be equal to weighted average of all possible outcomes. All possible outcomes. Understood this point? The provision will be equal to expected value of obligation. What is the expected value of obligation? Nothing but weighted average of all possible outcomes. Now you know how to calculate weighted average. So this will be equal to what? Batao. 1000 into 60% into 60%. What is the amount? Still, bolo yes or no? Plus 1000 into 30%. What is the amount? 1000 plus 1000 into 10%. What is the amount of outflow? 3000. So this will become expected value. What is the expected value? Can you say? This become nil plus how much? 300 into 1000 means 3 lakh. 3 lakh na? And this become plus 10%. 10% is how much? 100 into 3000 how much? This is also 3 lakh. 3 lakh na? So total become what? 6 lakh. 6 lakh become what? Amount of provision. Have you understood? Have you understood this? Now, if the amount, if you say, if time value of money, TVM means what? TVM means what? So if TVM is material, that information I have not given now, then you will find out discounted amount. Then provision will be what? Discounted amount na? But if TVM is not material, TVM is not material, then amount of provision will be what? Undiscounted amount. Undiscounted amount. Have you understood this point? Are you able to understand? Means of course in exam rate of discount will be given. If rate of discount is given, to discount karna hai. You need to discount it. The rate of discount is not given, so we'll assume time value of money is not material. Simple. From exam point of view, simple. Rate of discount is given or not given? Got it? Have you understood the entire? The same question was asked in exam for 5 marks. So what do you think? Simple question, difficult question? Simple question only. Simple question. I hope you have understood this point. So when obligation involve large population, then we'll calculate expected value of obligation. Key term is what? Expected value of obligation, which is nothing but weighted average of all possible outcomes. You need to only memorize the key terms. But when there is a single obligation, correct? Let me take one example. When there is a single obligation, Example, suppose on 31st March, on 31st March, there is one high court case is pending. In some cases pending against what? The company. And suppose there is a present obligation as well as outflow resource probable and amount can be estimated. Therefore, we need to provision that all three conditions are satisfied. Then only we'll measure provision. Na? Now, as per expert, who is expert यहाँ पर? Lawyer ना? अरे बोलना रे. As per legal lawyer, legal advisor, correct? What they want to say? What they want to say? Just try to understand. See, these 60% chances of high damages and 40% chances of low damages. Understood? This point? They are of this view. So you can see there is a single obligation with two possible outcomes. Whenever there is a two possible outcome, normally we don't do average. Normally we don't do average. In this case, we apply most likely outcome method. We apply which method? Most likely outcome method. But what is the most likely outcome? 60%. Therefore, in this case, suppose this amount is 10 lakh and this amount is 2 lakh. So, amount of provision will be equal to what? Amount of provision will be most likely outcome. Understood? And most likely outcome will be 10 lakh, na? 10 lakh. Have you understood? Most likely outcome will be 10 lakh. This point have you understood? बोलना रे. So this is known as what? Most likely outcome method. So when there is a single obligation with two possible outcome, only two possible outcome, then we go for what? Most likely outcome method. In this case also, can you say time value of money is material? If material, then which amount? Discounted amount, na? Are you able to understand what I am saying? Discounted amount. Now you are expert in discounting. The rate of interest is given and time period is given. You can discount it, na? Got it? And if your time value of money is not material, then what? Undiscounted amount. Undiscounted amount. Have you understood this point? Have you understood this point? Correct. This also you have understood. Let me take one more example. Same example. Suppose on 31st March, once again High Court case is pending and High Court case is pending and of course all the conditions are satisfied, so we require provision and therefore we ask whose opinion? Expert opinion. As per expert, now what they want to say, 20% chance of high damages, 40% chance of low damages and 30% chance of no damages. Quite possible. We can see, okay, this is to 70% now and this is 30%. These chances of occurrence of loss is more than chances of non-occurrence of loss. Therefore, hence it is a present obligation. It is a present obligation, and this of course provision is required. But there are three possible outcomes. When there are three possible outcomes, then we can't apply most likely outcome method. For applying most likely outcome method, you require only two possible outcomes. Means in this case, you can't apply most likely outcome method. And in this case, you will apply weighted average only. So in this case, can you say provision will be equal to what? Provision will be equal to weighted average weighted average of all possible outcomes, that is equal to, I have not given the amount, suppose high damages is 10 lakh, this is 2 lakh, and this is nil. Understood? So 20% of what? 10 lakh plus 50% of what? 2 lakh plus 30% of what? Nil. So what amount is coming? This 2 lakh plus how much? 2 lakh plus 50% of 2 lakh how much? 1 lakh. It is 3 lakh na? Answer become what? Have you understood this point? Till now, no question has been given for single obligation ICA study material. In whatever question have been given, that has been given for what? Large population in ICA study material. But I am just giving. If suppose they create a new question, you should be able to do it. Correct. But simple only. Simple. So what they want to say, let us understand again. When there is a single obligation with two possible outcomes, then provision is created based on what? Most likely outcome. Correct. How to measure you have understood? Now, any question you can do it by own. Any question you can do it by own. Now some special point. Already we have understood that amount of provision should be present value of expenditure in the time value of money is material. Now for provision, whether it should be created before tax or after tax. So can I say provision is a charge against PL, charge against profit before tax only. Therefore provision amount should be net of tax or it should be gross amount. Should be before tax means gross amount. Can I see this is only a clarification? It is understood it will be always before tax. The provisions should be measured before tax. Now whatever discount rate will use, discount rate should be pre-tax ki post-tax. Once again pre-tax. Why? Because provision is charged to PL before tax. This is also one clarification. The discount rate should be what? Pre-tax. Understood this point? Correct. Now this point number 4, what they want to say? Gain from expected sale of asset. Gain from expected sale of an asset shall not be taken into account for measurement of provision. Shall not be taken into account for measurement of provision. Just try to understand. I'm just giving one example. Suppose some machinery has been destroyed and now it requires repair. It requires repair. And let us assume all the condition is satisfied. Let us assume all the condition is satisfied. It needs to create provision for repair. You need to create a provision for repair now. So when you do repairment, so it might happen some component of that plant may be sold. When you do repair, so some component, suppose this camera, some camera require repair. It is quite possible lens has been damaged. So whatever lens which has been damaged will be sold. When you sell that old lens, there will be some gain or loss on sale. Whether that gain or loss on sale of such component of the assets should be taken into consideration to create provision. Have you understood this point? Not able to understand. What I am saying? Whenever you create a provision, the provision is based on future expenditure. So what I am saying, suppose you are supposed to do some repair expenditure in future. So when you do repair, it is quite possible you may sell some asset. So from sale of such an asset, there can be some gain on sale of such asset. Whether that gain on sale of assets should be taken into consideration to calculate the amount of provision. Means suppose the outflow is 10 lakh and gain is 2 lakh. So we should create a provision of 10 lakh 8 lakh. We should create a provision of 10 lakh 8 lakh. Have you understood? Question have you understood? First we need to understand the question. Because in exam similar question will come, you will be confused. So we should create a provision of 10 lakh 8 lakh. What do you think? 10 lakh 8 lakh. 10 lakh because I have read that para. Now already written gain should not be considered. So you have read that para now. So you are thinking because I have read that para. But can I say in exam, when you are writing that exam, that this chapter is not revolving. There are many chapters revolving in your mind. That become a situation where you need to recollect all the information. For that, constant revision is required. what they are saying, gain from expected sale of an asset shall not be taken into account. So any gain on expected sale of an asset should not be taken into account for calculation of a measurement of provision. Okay, this sale of an asset will be covered under India 16. Is any gain or loss on sale of assets. Suppose this is property, plant and equipment. The property, plant and equipment you need for what? India 16. India 16. Understood? Correct. This point also you have understood. Let me take one good question. It has been given in ICS study matter. This just write down somewhere. Question number 30 to do by your own 30. Already I have taken this question into consideration. Write down somewhere question number 30. Question number 30. Already I have done this question. Huh? Come to one more question. But where is that question? You can also do question number 24. Write down question number 24 also. Come to question number 20. Very good question created by institute but not yet asked. Not yet asked. Let us read. Marico has an obligation to restore environmental damage in the area surrounding his factory. So it has an obligation already written. It can be legal obligation, it can be constructive obligation. Expert advice indicate that restoration will be carried out in two phases. The first phase requiring expenditure of 2 million means 20 lakh to remove the contaminated soil from the area, and the second phase commencing a year later from the end of first phase to replant the area with suitable trees and vegetation. Suppose normally what we suppose we are doing some construction of road. When we construct the road, first destroy entire plantation etc. There may be some legal obligation or constructive obligation to the area. So can I say any contract of constructing what road has an obligation to restore also? For that restoration we should create a provision. The estimated cost of replanting is 3.5 million. Means how many lakhs? 35 lakh. Marico uses a cost of capital before taxation 10%. So they have given 10% discount rate. They have given pre-tax. If you want that only, thank you very much. Want before tax or after tax? Before tax. And the expenditure when incurred will attract a relief at the company's marginal tax rate of 30%. Means the tax rate is how much? 30%. Can I say every expense has some tax benefit? Because when you increase the expense, your tax will decrease. But whether this tax rate is relevant, because provisions should be recognized before tax or after tax. And this has been given only to confuse. This tax rate is not at all important. Right now we are in India 37. Exam hall, this information may be dangerous. Am I right or not? Correct. Marico has not recognized any provision for such costs in the past, and today date is 31st March 2002. The first phase of cleanup will commence in few months time and will be completed on 31st March 2003 when the first payment of 2 million will be made. Phase 2 cost will be paid 3 years later from the end of first phase. Calculate amount to be provided at 31st March 2002 for restore. Have you understood? Correct. Means what they want to say. We are doing question number 20. Right now we are standing on which date? 31st March 2020, na? 2002. Correct. And after 1 year, 31st March 2003, phase 1 will be completed. And after how many years, phase 2 will be completed? 3 years from which date? From phase 1 completion. Means this year, na? So this is what? 4, 5, and this will be 31st March 2006. This is phase 2. Correct. This expenditure is 20 lakh. This expenditure is 35 lakh. We are here to find out present value as on this date. At what rate they have given? Present value should be calculated at 10%. So 10% will create. This is the information. Let us calculate it. Let us calculation of amount of provision for restoration cost. Correct. We write on year end. We are creating this provision as on which date? As on 31st March 2002. Year end, first year end will be 31st March 2003, then 4, then 5, then 6. Then find out expected outflow. What is the expected outflow? First year how much? 20 lakh na? 20 lakh. Second year how much? Nil. Third year how much? Nil. Fourth year how much? 35 lakh. Then we'll find out present value factor at what rate? 10%, and then we'll calculate present value. We can add on 0.909, 0.826, 0.751 na? And 0. How much? How to calculate? How to calculate, you know? What is the fourth? 0.683. Now we can calculate it. Can you give me the present value? So this will become the amount of provision. Provision will be how much? Can you give me the total amount? First, बोलो. Give me total. Total is what? 42 point. 42 lakhs. 42 lakhs. 8,500. Is the answer given by you. Let's see whether the answer is correct or not. Oh, 100% correct. Means you have a good calculator. You have a good calculator, na? Yes, calculation is not important. Calculation you can take exam because calculator you will have. We are not focusing on calculation. We'll focus on how to calculate that amount. Means can I say this amount is not important. This we can calculate. This is important, na? If there is any mistake in this, you will do wrong only. Even though you have calculator, we'll not focus on calculation. We'll focus on what? How to calculate. Understood? I hope you have understood. Okay, simple question, 5 marks question, super easy. Super easy. Any doubt? No doubt. Yeah, this type of question, the lollipop question. But they can ask this type of question. They can ask this type of question. Now, let us come to next point about measurement only. Risk and uncertainties. Risk and uncertainties. Just try to understand what they want to say. See, whatever, uh, for whatever transactions, for whatever event, we are recognizing provisions that is surrounded by many risks and uncertainties. And because of that risk and uncertainties, our expected outflow can be different from actual outflow. Because when I am saying expected outflow, that is based on past transactions. But past transaction and future transaction can be different. For example, right now I have taken one question. Right now I have taken one example about warranty. So in this warranty example, all these amount, minor default, major default, outflow is 1,000, 3,000, that is based on past transaction. But in future the outflow may be different because of risk and uncertainty. And therefore, what India says that whatever expected outflow you have calculated, that should be adjusted that for that risk and uncertainty. So some adjustment is required so that there is not much difference between expected outflow and actual outflow. So some adjustment is required. That adjustment is known as risk adjustment. We call it risk adjustment. What India 37 says that risk adjustment can be done in three ways. The risk adjustment can be done in three ways. However, in exam, don't worry, all the information is only to apply the information as given. But the risk adjustment can be done in three ways. How you can do risk adjustment? Can I say either will increase this amount, either increase this amount only because of risk and uncertainties, or can I say you can increase this amount directly 6 lakh, whatever whatever present value you have calculated this amount that only you can increase, or can I say we can do adjustment in rate of discount that can be adjusted, what they are saying, any risk adjustment can be done in three ways. Either adjust the amount of outflow, or adjust the amount of present value whatever you have calculated, or adjust the risk for what means adjust the discount rate for that particular risk. Understood? That they want to say. Please let me read what they have given. Let us understand. The risk and uncertainties that surround many events and circumstances shall be taken into account in reaching the best estimate of a provision. Is to find out the best amount of provision, we should also consider risk and uncertainties that is surrounded for many events and circumstances. A risk adjustment should be made, means we should do some risk adjustment should be made for the amount that the entity would pay in excess of expected present value of outflow due to uncertainty attached with the actual outcome. Is whatever excess amount, whatever you are paying when the actual amount is calculated because of that risk, for that we'll do some risk adjustment. Such risk adjustment can be done in following ways. First is what? Adding it to expected present value of future outcome is increase the expected present value of future outcome. Adjust the estimate of future outflow, or some adjustment in future outflow only, or do adjustment in the discount rate, or do discount rate adjustment. Understood? Can I say this can be done only as per the information is given. You can't apply risk adjustment by your own. So for this information will be given in the question only. Nothing to worry. They will only say adjust the amount of discount rate, adjust the percentage of discount rate, or adjust the amount of future outflow, or adjust the present value of expected outflow. Understood? Just try to understand. When you are saying adjust, so for the risk answer, can I say this amount should be increased? This amount should be also increased. You not decrease it now. When you are saying risk adjustment, always it will be plus. It cannot be minus. So you will do plus now. But when you are saying discount rate, in discount rate you will do plus ki minus. If you want to do some adjustment in discount rate for the risk and uncertainties, you will do plus ki minus. Minus. Why? Because can you see when discount rate will decrease, the only present value will increase. So here the adjustment should be what? Decrease. Understood? For example, they have given 10% discount rate and they have said 2% adjustment is required. So you'll do plus ki minus? You'll do minus. You don't do plus. Have you understood this point? Correct? This point have you understood? Correct? No question has been given. Normally in exam they give risk adjusted discount rate only. But suppose they create this type of question, you should know this point. Got it? Yes, sir. So with this measurement principle is also done. Measurement principle is also covered. Any doubt? No doubt? Got it? They have given one question. Let's say question number 6. A very simple question has been given. Just write down question number 6, that question we have done in class. Whatever question we are doing in class, refer somewhere. So for risk and uncertainty, we are taking which question? Question number 6. X Solar Power Limited, a power company, has a present obligation to dismantle a plant after 35 years of useful life. So there is a present obligation already given. X Limited cannot cancel this obligation or transfer this obligation to third party. X Limited has estimated a total cost of dismantling is 50 lakh, the present value of which is 30 lakh. The present value is given 30 lakh. Based on the facts and circumstances, X Limited consider a risk factor of 5%, that is risk that actual outflow would be more than expected present value. How should X Solar Limited account for the obligation? You only say 5% should be added to 50 lakh directly to 30 lakh. So they have said risk more than what? Expected present value. This 5% adjustment is required for present value or future value? Present value only. Therefore, the amount of provision will be 30 lakh plus what? 5%. For is equal. They are saying, so the liability means provision will be 30 lakh plus 5%, that is 31 lakh 50. This type of question they have given in ICS study matter. Means from my point of view, now for this type of question they will ask MCQ. Means they will create an MCQs and they will try to confuse you with the options only. Now if you are not conceptually strong, you will do mistake. Understood? Correct? Yes, sir. This also completed. Any doubt? Whatever question I am not doing now, that means you can do it by your own. Also. Now with this, we have completed the concept of this chapter. We have completed concept, but chapter is not completed. Now there are four special points. Means the answer of that four, means the conclusion of that four special point is based on whatever discussion we have done. So right now I will just give a case study. Only will say how to react in that type of case study. If you know the concept without reading India 37, can I say you can answer? The first special case is reimbursement. First special case is what? Reimbursement. Reimbursement. So reimbursement is what? That I need to explain. Reimbursement means what? Suppose for a future expenditure, you have already created provision. Means there is a expenditure for which all the conditions are satisfied and require a provision. But that future expenditure will be reimbursed by third party. Understood? Can be reimbursed by third party, for example, insurance company. So insurance company will reimburse that amount. So this is the concept of reimbursement. This is a concept of reimbursement. Understood? So already there is a future expenditure for which you are applying India's 37. You are applying India's 37. But that future expenditure will be reimbursed by third party. This third party can be director also. Director will reimburse the company. Or it can be any other third party. So if there is a reimbursement, so it become inflow. It become expected inflow now. So my first question to you all, should we recognize provision if there is an expected inflow? First question, should we recognize a provision if there is a reimbursement? Once again, first apply your common sense. When I'm asking question, become CA and think. Don't be CA final student. Don't become student. Think like a chartered accountant. Once again, already there is a future expenditure and all the conditions are satisfied, we should recognize provision. Then you came to know that for that expenditure, there is some reimbursement from third party. Now the question is that if there is a reimbursement, means the expenditure will be reimbursed by third party. It can be insurance company, it can be any other party. Should we recognize provision? Yes or no? Should we recognize provision? Either say yes. How many are saying yes? How many are saying no? Yes. How many are saying yes? We should recognize provision. I'm just asking yes or no. I'm not asking. When I ask explanation, then only you need to say. I'm asking, should we recognize provision or not? How many are saying yes? How many are saying no? Yes. No. Means some of you are saying no, some of you are saying yes. It is a provision and reimbursement are same transaction or different transaction. So different transaction you will apply differently, na? And they are different party. Expenditure will be made to some other party and reimbursement will be from other party. So guys, if for expenditure, so you will apply India's 37 already. I said all the three conditions are satisfied, then provisions will be recognized only. So of course provisions should be recognized. First question we got provisions should be recognized even though there is an expected reimbursement. The second question is that for that reimbursement should be recognized an asset because there is an inflow, should be recognized an asset. Apply common sense. And raise your hand. Don't say like this, huh? Papa, raise your hand. Till I say don't say anything. Raise your hand, start saying. Say like this only. Raise your hand. I just want to give time to everyone. Think first. Everyone should be given equal amount of time. 1 second. What is the question that provisions should be created that you have understood? Now the question is that for the reimbursement expected inflow should be recognized an asset. Now raise your hand. I said already we have done everything. Already we have done everything. You need to apply your common sense. But 100% correct. Already we have done inflow. So you need to apply inflow concept now. So if the reimbursement is virtually certain, then what? Recognize asset. If it is not virtually certain, means if it is probable, then disclose it as what? Contingent asset. Only this much. This much. Means once you have understood this chapter, then whatever case study is given in the exam, you can react. You can react now. Understood what they are saying? Let us understand. When expenditure required, when the expenditure required to be settled is expected to be reimbursed by a third party. This third party can be insurance company. It can be insurance company. Example, it can be insurance company. So right now we are discussing about reimbursement. We are not discussing about future expenditure. For that already we have understood if all the three conditions satisfy recognized provision, otherwise disclosed as contingent liability. We are not discussing about expenditure. We are discussing about inflow now. Now, if the reimbursement is virtually certain, is more than 95%, then recognize reimbursement as a separate asset. As a separate asset means in balance sheet, it should be a separate asset. Means in balance sheet, the amount of provision and reimbursement asset cannot be set off. Means in balance sheet, what you'll do? This is the balance sheet. So in balance sheet, reimbursement asset will be shown separately and the amount of provision will be shown separately. Understood? So it will be recognized as a separate asset in balance sheet. Means in balance sheet, you can't net off these two amounts. Correct? However, in SOPL, the reimbursement amount will be deducted from provisional amount and net amount will be shown as an expense. So in SOPL, it will be set off. In SOPL, net amount will be shown as an expense. So what they are saying, such amount is set off against provision and net amount is shown in PL. In PL, understood? Means in PL, in SOPL, can I say what you'll do? Provision, say minus what you'll do? Reimbursement and net amount will be shown as an expense. Have you understood this point? Net amount will be shown as an expense. In balance sheet, separate asset. Balance sheet, net expense. Sorry. In balance sheet, separate asset. In SOPL, net expense. However, can I say the amount of reimbursement asset should not exceed the amount of provision? The amount of reimbursement assets should never exceed what? Amount of provision. Either it should be equal to amount of provision or should be less than what? Amount of provision. The amount recognized as reimbursement assets should not exceed the amount of provision. Understood point? Correct? Understood? Now, if it is not virtually certain, so guys, if it is not virtually certain, so it can be either probable or not probable. If it is probable, then disclose such amount as a contingent asset in notes to account. If it is not probable, then no treatment required. Correct. So not recognized as an asset. However, if the inflow is probable, expected reimbursement should be disclosed where in notes to account. Simple. Any doubt? Have you understood this point? Follow. for reimbursement. Just try to understand. Ind AS 37 is silent about measurement of asset. But can I say in this case also, if there is a the time value of money is what matter here, so you should recognize it at present value. Just try to understand. Everyone. See, right now you are standing at this point of time. This is 31st March, and there is one expected expenditure after 2 years, and you have expected that 10 lakh to be the amount of expenditure. The future expenditure, you'll find out present value, and present value will be the amount of provision. Suppose this present value is 9 lakh. मान लेते हैं 9 lakh. So your provisional amount is 9 lakh. Now when this is 10 lakh, can I say either reimbursement as per the contract will be equal to 10 lakh or less than 10 lakh? It cannot be more than 10 lakh. It cannot be more than 10 lakh. The reimbursement insurance company will discuss actual loss or less than actual loss. Not more than actual loss, na. So suppose it is 10 lakh only. So can you say here also you will create present value only, na. So this is also 9 lakh only. Suppose this is 9 lakh. So the present value will be suppose 8 lakh. So it is less than what 9 lakh only, na. They have just given one clarification that amount of reimbursement assets should not exceed what amount of provision. That is understood point. That is understood point. I will say that is only a clarification given. As a CA, so you'll never create an excess amount, na? Got it? Sir, we have understood. Let me take one question. Come to question number 9. X Beauty Solution Limited. You know beauty solution? Yes, sir. Is selling cosmetic product. You know cosmetic product? I know because I am married. Under his brand name B. Before marriage, I was also not knowing. But it is getting its product manufactured from Y Limited. It has an understanding with Y Limited that if the company become liable for any damage claim due to any injury or harm to the customer of cosmetic product, 30% will be reimbursed to it by Y Limited. It is an understanding. Understanding means what? Understanding means just try to understand. We have done one contract. There is an understanding that I will complete my syllabus. It is a part of contract, na. And again, contract can be oral, it can be express also. When we have done some contract, there are some express, there are some implied point. It is implied that I will teach you as per ICA requirement. If I am not teaching as per ICA requirement, even though it is not mentioned in the invoice, you can file a case against me. Because being a student, you will respect me. But suppose you are my customer and I am your vendor. You have a right to file a case against me, na, even though it is not written in the invoice, because it is implied that if I am teaching FR for CA exam, I need to teach as per ICA requirement. So there is an understanding. There is an understanding. So the understanding is also part of contract. Means it will create a legal obligation. It will create a legal obligation, na? Nare. Now 30% reimburse. There is an understanding. During the financial year 2001-2002, the claim of 30 lakh demanded by the customer from X Beauty Solution Limited, how should X Beauty Solution Limited account for the claim that become payable? What will be the for 30 lakh? What you will do? You will create a provision. Means you need to assume that all these three conditions satisfied because of course there is a present obligation. Of course, outflow is also probable and reliable estimation. Achha, for reliable estimation, if question is silent, always assume it can be made. Means if suppose question has not given estimated amount, so always assume yes it can be estimated because we can estimate anything given a chance. Listen, I can estimate your life given a chance. If you give a chance, I can estimate your life. If question is silent about what? Estimation, always in exam assume that yes it can be estimated. Don't assume that it cannot be estimated. Now, what about 30% of 30 lakh? Should we recognize it as a reimbursement asset? Why? Yeah, because of that understanding, can I say now it become virtually certain? It become virtually certain. So how much reimbursement asset you recognize? 30 lakh ka 30% means 9 lakh. So what will be the amount of provision? 30 lakh or 30 lakh minus 9 lakh? Provision will be 30 lakh, reimbursement asset will be 9 lakh, but amount of expense will be how much? In SOPL. Amount of expense in SOPL will be how much? 21 lakh. You can see the same thing is given. If the reimbursement of 9 lakh shall be recognized as reimbursement, right? And provision will be recognized for 30 lakh. However, in SOPL, 21 lakh will be shown as a simple question, but can be dangerous in exam hall. Because in exam hall, you should retain this point. Right now, this is the first chapter of your CA final FR. मजा आ रहा है अच्छा this type of question, but same question can be a dangerous question in exam hall. Have you understood? Can we proceed? Yes, sir. Why not? You can. Now, second special case is about future operating loss. Future operating loss. Let me create one question. Is I'll just create a case study. You need to say is react by your own. React by your own. Even though we have not done that special point, but you can apply in AS 37. Now suppose there is one entity. Example we are doing. There is one entity X Limited. X Limited has two business one and business two. Business one, business two. Now business one is a profit making business and business two is a loss making business. Correct. Now current year loss is 20 lakh and they are expecting that in future year the operating loss may be 30 lakh. Operating loss may be 30 lakh. And because of that reason they have decided they have decided to close down what? Close down business two. They have decided but not yet closed down. Means of course closure will take 1 year, 2 year actual closure. Have you understood? So can I say this become future operating loss? We are not discussing about current year loss. Current year loss already recognized. We are discussing about future operating loss. Should we recognize a provision for future operating loss? Have you understood the topic? Business one, business two, business one, profit making, loss making. Now management is expecting that in future, if they continue the business, then there can be loss of what? 30 lakh. And therefore they have decided to close down. But actual closure will take some time. Should we recognize a provision of 30 lakh? Should we recognize a provision of 30 lakh? Yes or no? How many are saying yes? How many are saying no? We should not recognize the provision. Why? It is? It is? You can say in that way. And can I say it is based on future event? This future loss is a future event now. Means can I say it arises due to future event, not due to past event. And therefore, can I say Ind 37 is not applicable? Ind 37 is not applicable. Yes, correct? Yes, sir. So what they want to say? Neither provision nor contingent liability as it is related to what? Future event. So when I am reading that, don't read the para. Once you read the para, interest lost. Means when I have written future operating loss, if you read this now, then interest lost. Then you will answer as per this para only na. So please don't read by your own. Till I read, till I read, you should not read. Then there is no use of giving example na. I don't know whether you have read or not. You have not read na. Thank you very much. This you have understood. Future operating loss, I think no discussion required. Next special cause is next special case is what executory contract. But before I ask, I give example of executory contract. What is the meaning of executory contract? This you have done in your CA foundation as well as in CA Inter also. What is the meaning of executory contract? You have done or not? Have you know some executory contract? Forgotten is what we do that we forget. We learn to forget, na? We learn to forget. We learn to forget. Yes, we learn to forget only. But if you forget, then how you can earn? Because from knowledge only you will earn, na? So not forget. What is the meaning of executive contract? Anyone who can respond? So I will only explain. Executive contract are those contracts which is neither performed by both the party, or we can say, or it can be, it is performed partially by both the parties. Correct? So those contract which is either not yet performed by both the party or is performed partially by both the party, that contract become what? Executory contract. That contract become executory contract. Means any contract which we settle on future date. Suppose we have done one contract and I will say I will teach once you pass CA inter, that time you pay me fees. We have done one contract. Yeah, I will teach you CA final once you pass CA inter. So can you see this is to not yet performed by both the parties. I have not given any service. You have not done any payment. So this become what? Executory contract. Understood? So executory contract are those contracts under which neither party has performed any of its obligation, or both parties have partially performed their obligation to an equal extent. Meaning, have you understood? Let me take one example. Now I have read up to this, so you are also supposed to read up to this only. Once you read the next para, interest loss. Correct? Meaning you understood? So let me take one example. Suppose one company, ABC Limited, has entered into a contract with XYZ Limited to buy machinery after 1 year. Understood? The contract was done today on 1/4/2023. This is the contract date. So can you say ABC Limited has entered into a contract today only, but to buy a machinery after 1 year? Means machinery will be delivered after 1 year and the payment will be also done after 1 year. This become what? An executory contract. But can you see they enter into contract? It is a contract now. The contract, correct? And the as per contract, they need to pay rupees 10 lakh. They need to pay rupees 10 lakh. Now the question is that because ABC Limited is a buyer, so they have an obligation to pay. They have an obligation to pay 10 lakh. Whether for ABC Limited a liability should be created or provision should be created. Now the question is that should we create a liability in the books of ABC Limited for this executory contract? Have you understood this point? Case study you have understood. ABC Limited has entered into contract to buy a machinery, but after 1 year. So payment will be done after 1 year only. Because it depends upon delivery only, na? Correct? Some advance can be given, but actual payment will be done after 1 year only, na? Are you able to understand what I am saying? So my question to you all is right now on the date of contract, whether ABC Limited should create any provision? Yes or no? Should create any provision because they have already entered into contract. Should they create any provision or should they create any liability? What do you say? Follow? Apply your common sense. Apply a common. They could just try to understand whatever you are thinking. Just say. Right now we are not focusing on correct answer or wrong answer. We are only just finding out whether you have an ability to give correct answer. Means in the course of time now, 100% your efficiency will increase. the third day of what FR class. But after 20 class, you'll see that your efficiency of answering is increased. But you should try. Understood? Batao. Should we create any provision? What do you think? Yes or no? Yes or no? How many are saying yes? How many are saying no? Absolutely correct. Means your answer is correct, na? Means in any given circumstances you can give correct answer. Yes or no? I have not read. And can I say in CA Inter you have not done this point, na? I know what is the level of CA Inter. No teacher will teach this point. No teacher will teach this point. However, AS29 also deals with the same point. But no teacher will teach this point. I know the level of CA Inter. So it means you have applied your common sense and you have given correct answer. But why you have said no, no, we should not create liability? Why? This future event only. Can I say this executive contract will be performed in future? It become a future event. India 37 is not applicable only. India 37 is not applicable. So can I say it is an executory contract? This too you have understood now. It's an executory contract now. And India 37 is not applicable. Not applicable. India 37 is not applicable. Have you understood this point? Have you understood this point? So if you see what they are written, this standard does not apply to what? Executory contract. This standard does not apply to executory contract unless they are onerous. Means India 37 will be applicable to executive contract once it become what? Onerous contract. Now we need to understand what is the meaning of onerous contract. Means India 37 is not applicable to executive contract. But once that contract become what like onerous. Now what is onerous that you don't know. But the term you should know na. Once again. India 37 is not applicable to executive contract. But it will be applicable to executive contract. Once it become onerous, it means now I need to explain when it will become onerous contract. When it will become onerous contract. Let me continue the same example. Initially there is not applicable. Now what happened? I am continuing the same example. After 6 months, correct? After 6 months, what happened? EBC Limited changed the production method. Understood what happened? Quite possible they can change the production method. During COVID-19, everyone changed their production method. Everyone changed the business only. We change our face-to-face class to what? Recorded classes. It is quite possible within a span of time we change the production method only. Now we don't require such machinery. We don't require such machinery now. Such machinery is not required. Now the question is that whether such contract can be cancelled. Now just try to understand when I am saying contract, normally this contract, if it is enforceable by law, it is non-cancellable. And I hope you know the meaning of contract. Any agreement which is enforceable by law is a contract. It means it is non-cancellable contract. It is a non-cancellable. The non-cancellable contract now. Means it is binding on both the parties. When I am saying enforceable by law, means any party default, we have a right to file a case against him. Therefore, it is enforceable by law. Now the question is that if it is non-cancellable contract, so what is non-cancellable contract? Non-cancellable contract are those contracts which can be cancelled. मजा आ रहा है ना? Non-cancellable contract are those contracts which can be cancelled. Any contract can be cancelled. The non-cancellable contract are those contracts which can be cancelled upon payment of penalty. These cancelable contract are those contracts which can be cancelled without penalty. Understood? So cancelable contract are not enforceable only, and therefore it is not a contract only. Are you able to understand what I am saying? So non-cancelable contract are those contracts which can be cancelled upon payment of penalty. See, there can be some penalty clause also. There can be penalty clause. Right now we have done one contract. Can I cancel it? Can I cancel it? If I cancel, you have a right to file a case against me. Yes, but you file because you are my student and I will not cancel also. But I can cancel now. But you have a right to file a case against me. Of course, it is enforceable in law. It is enforceable in law now. But if suppose I can cancel, I cannot file a case against me, which is not enforceable only. Correct? So just try to understand. So such machinery is not required. So if such machinery is not required, it cannot be cancelled, but it can be cancelled upon payment of penalty. It means now what happened? Just try to understand. Can you say because it cannot be cancelled, then it cannot be cancelled. We need to purchase it, and for purchase we need to pay what 10 lakh. We need to we need to what pay 10 lakh, but the expected benefit from that machinery zero. We cannot use that machinery in our business. So can you see due to this contract, the expected benefit less than the expected cost of meeting that obligation. Therefore, such contract become onerous. This case now this contract become burden for us. The burden. And now India 37 says that once the executive contract become burden, it become onerous, then apply India 37 and recognize provision for the expected cost, for the expected unavoidable cost. We should create a provision for unavoidable cost, the cost which cannot be avoided. It means we should create an amount of provision or not. So we should create a provision once it become onerous, and provision will be equal to unavoidable cost of meeting the obligation, which is lower of. This will be lower of what? This is lower of point number A, cost of meeting that obligation or penalty payable for cancelling the contract, whichever is what? Lower. Means either you will execute it or you cancel it. Depends upon penalty clause, na? Depend upon penalty clause. So this will be the amount of what? Provision. Have you understood this point? Have you understood this? So can I conclude that for executory contract India 37 is not. But once executory contract become onerous, then India 37 is applicable. When it will become onerous? When the expected cost of meeting the obligation more than expected benefit from such contract. This cost is more than benefit, then become burden. In that case apply India 37. Correct? Let us read. Onerous contract. An onerous contract is a contract. Onerous contract is an executory contract in which unavoidable cost of meeting the obligation under the contract. In which unavoidable cost of meeting the obligation under the contract exceed the economic benefit expected to be received under it. Unavoidable cost is more than expected benefit. Meaning you understood? If an entity has a contract that is onerous, so any contract which become onerous, the present obligation under the contract shall be recognized and measured as a provision. Measured as a provision. In this case, the amount of provision will be equal to unavoidable cost, which is lower of cost of fulfilling the obligation, cost of fulfilling the obligation, or any compensation or penalty arising from failure to fulfill it. Failure to fulfill it. So if you are not able to execute it, to pay some compensation or penalty, the lower of that amount, A or B. Have you understood? So unavoidable cost is lower of what? Cost of fulfilling the contract. Now one doubt will come, so what is that cost of fulfilling the contract? How to calculate that cost of fulfilling the contract? So this cost of fulfilling the contract is given this para. So what is that cost of fulfilling the contract? What they are saying, cost of fulfilling the contract comprise the cost that relate directly to the contract, means which are directly attributable to that contract. Means any incremental cost, means when you perform that contract, what cost will be incurred only because of that contract. Is any cost which will be incurred even though you are not performing that contract, that is not directly related cost. Understand what I am saying? What they are saying? Costs that relate directly to the contract consist of incremental cost of fulfilling the contract. Incremental cost. Incremental cost means the cost which is incurred when you are fulfilling that contract. Is any cost which will be incurred even though you are not fulfilling the contract is not an incremental cost. Are you able to understand? For example, just try to understand. Right now, I am taking a class. Okay, so when I am taking the class, electricity expense is an incremental cost that I need to be this classroom electricity only when I am taking the class. Otherwise, so it will be not used now. Electricity cost become incremental cost. But suppose if I am not taking the class, then also I need to pay to my employee. I need to pay to my employee now. Why do I need to pay? So that is not an incremental cost. That is not an incremental cost because that will be incurred even though you are not fulfilling the contract. I hope you have understood. Incremental cost, for example, direct material, direct labor, etc. Now you know what is direct labor, what is direct material. Costing you have done. And also an allocation of directly attributable cost. So there can be some overhead which are directly attributable to that particular contract, that will be also added. For example, the depreciation of an item of PP used in fulfilling that contract among others. Is any plant and machinery which is used for that particular contract, the depreciation of that plant and machinery is also taken into consideration. These are other directly attributable costs. I hope you have understood these 2 points. Understood? Now, unavoidable costs. When I am saying unavoidable costs of meeting the obligation in the contract, only those costs that are incremental. Means those who are incremental to the performance of the contract, that are only unavoidable now, which you can't avoid because when you are fulfilling the contract, you need to incur that cost. Understood? Correct. Means which cannot be avoided by entities' future actions. Cannot be avoided. You need to pay that amount only. Or do not include any allocated cost that will be incurred regardless of whether the entities fulfill the contract or not. Any cost which will be incurred even though you do not fulfill the contract are not increased. Already I have explained. So this clarification has been given about the cost of fulfilling the contract. I hope you have understood. Have you understood? This entire para is super important. I will say super important. A question is expected in exam. A question is expected in. Understood? Have you understood? Correct. Let me take some questions. One question though I have already taken which has been asked in exam. Let me take that question. Question I have already taken into consideration was asked in exam. Sun Limited has entered into a binding agreement with Moon Limited to buy a custom made machine for rupees 4 lakh. At the end of 2017-18, before the delivery of the machine, Sun Limited had to change the method of production. The new method will not require the machine order which is scrapped after delivery. The expected scrap value is nil. Given that the asset is yet to be delivered, should any liability be recognized for the potential loss? If so, give reason for the same, the amount of liability as well as accounting. Can I say? First, you should write on executive contract, the definition of executive contract. Then you should write on definition of onerous contract. Then you should write on yes, it is an onerous contract. And for onerous contract, India 37 will be applicable. Therefore, the amount of provision will be unavoidable cost, which is lower of what? Cost of fulfilling the contract. Can I say cost of fulfilling the contract in this case will be 4 lakh minus scrap value? But scrap value is nil only, and there is no penalty clause. So A is what 4 lakh and B is nil. Sorry, B this penalty clause is not there. So the amount of provision will be what 4 lakh only. There is no penalty clause given. Correct? You can see they have said 4 lakh will be the amount of provision. But journal entry you will do because they said accounting entry. Journal entry will what? Hello? Journal entry PL account debit to provision for onerous contract, or you can pass two journal entry. Expense account debit to what? Provision, and then PL account debit to that expense. What journal entry they have given? Onerous contract provision expense to provision for onerous contract. Then PL account debit to onerous contract provision expense. 4 lakh. Very simple. 5 marks question was asked in English. If you have understood this, all questions are very simple. One more question I will take. This newly inserted question can be asked in English. Is this actually a question is a illustrative question. Answer is given in the question only. Answer is given in the question, but in exam they can modify the question. Exam they can modify the question. Let us understand first question what is given. HBCL manufacture heavy equipment for construction industry. An order for supply 90 equipment was received from ABIL. The unit price of the equipment was agreed at 190 lakh. 64 equipment was supplied during 2001-2002. Out of 90 unit, how much already supplied? 64. So what is the balance unit which is not yet produced? Yeah, which is not yet supplied? 90 minus 64, how much? 26. And the balance quantity remaining to be supplied as on 31st March 2002. So can you see it is executory contract for balance unit? HBCL has 5 equipment in its inventory. Means already how much manufactured? So out of 26, 5 is already manufactured. So how much not manufactured? How much not manufactured? 21 is not manufactured. HBCL considered that contract was an onerous contract. Low. They have given only it is an onerous contract. Thank you very much. They have not given reason why it is an onerous. You will respect the information given the question. Always respect the information given the question. They will not respect by giving. And therefore the NRV of the entry has been taken as the value of inventory. So because it become onerous, so the inventory which is already produced for that NRV will be taken. The management of HBSL contained the cost incurred toward administrative overhead, finance charge, and research and development expense, sales overhead, headquarter expenditure, etc. are considered as a period cost. Period cost means what? Ongoing expenditure. Period cost means that even though units are not manufactured, whether such cost will be taken as a incremental cost. No, it should not be taken into consideration because already given period cost. Period cost means ongoing expenditure. The period costs are not what? Incremental cost. Incremental cost. And hence not considered for creation of provision. Exam they will not give this para. I say this is one type of illustrative question. Solution is the question only. In exam they will modify. If they will not give you, this will not be considered. That you need to find out now. Correct? And the same have not been incurred in the computation of unavoidable cost. Arey bhai, this so we know. Now, management of HBSL have submitted details of costs that have been considered for the creation of provision to our onerous contract. Material cost, can I say it will be included? Direct material. Labor cost, can I say this will be also included? And material overhead includes salaries and other expense booked under department linked with material like purchase. Can I say this is directly attributable overhead cost? So this will be also considered. Accordingly, the provision has been made considering the above cost only. understand from the question. This will also not be given for exam question. The value of provision for creating 21 remaining equipment to be produced as per working shown below. So of course 21 is going to be produced. So we find out what is the unavoidable cost. So they have the cost of production, which include material cost, labor cost, factory overhead, and material overhead. 199 they have given. Okay. Selling price is 190. So can you say if you produce it, how much you need to incur? 199. And what is the recovery? 190. What is the unavoidable cost? 9. Differential cost per equipment is 9. And how many units you are going to manufacture? 21. 21 into 9 is what? 21 into 9 is how much? You don't have calculator. And I'm asking you to calculate. 180? 181. Please calculate, huh? You are CA. We do 1 into 1 also in calculator, huh? So 1 mistake, 0 marks. 189 na? They have calculated it. Means these all are given. In exam question, don't expect all these things. So they have given differential cost of 9 lakh per equipment for 21 equipment is 189 lakh. Whereas the company's accounting treatment for the cost of creation of owner's contract is in line with the case that is more. Just write down all the para. Means same to same write down. If you write down this, you'll get marks now. I need to prove yes, this is correct. Or I will say they will modify the question. You need to find out 189. You can create now. Good question, I will say. But it is an illustrative question. Now can we read this entire question by room? Big solution is given. Same thing, the whatever content is given in India Saran's book, that you do copy paste in your own words. Then you can proceed. Simple or not? Simple. Once you have understood it is simple, huh? Correct? Okay. Can I continue? You want break? Can I continue or you want break? Because I need to complete it today only. There are some points left. So 4 is special pointer. So we have done reimbursement. Then we have done what? Future operating loss. Then we have done executive contract. Then we have done what? Onerous contract. Means executive and onerous are one only. The 3 we have done. One is left. One is left. One what is left? You know. This is left. Restructuring. Should I continue or you want break? 5 minute break ले लेते हैं. चलो take break. We'll take a break. Hello. Can we start once again, everyone? Yes, sir. Now, before break, we have understood the onerous contract. These three special point we have done. These three special point is important from examination point of view. Or it has been seen that normally in exam they are special point. Correct. Now, one summary has been given about that provision, contingent liabilities, and no treatment. You can do by roll. Already I have explained about this summary. You read by roll. Whenever you are doing revision, it will help you. Now there are some small point. Let us complete small point. Then we'll come to the last special point. Now changes in the provision. Changes in the provision. Can I say? Can I say? The provisional amount should be reassessed at the end of each year. Circumstances may change. Information may come. So best estimate may change. So there should be changes in the amount of provision at each reporting date. Means reassessment of that provisional amount at each reporting date. There can be either increase in the amount, there can be decrease in the amount, or it is quite possible now provision is no longer required. The provision is no longer required, we should reverse the amount of provision. Understood? So what they are saying, provision must be reviewed at each reporting date and adjust to reflect the best current estimate. If provision is no longer required, as it is not probable, amount of provision must be reversed. So a provision can become contingent liability, or contingent liability may become provision. Understood? So whatever done, we need to adjust the amount of provision or adjust the amount of contingent liability. Is adjust the disclosure of contingent liability. Correct? The unwinding of provisional amount. This is important. Unwinding. Just try to understand. When I am saying provision is a present value of future expenditure. So suppose this is 10 lakh and you have created present value here. So you have recognized present value now. What journal entry you have done? Journal entry is PL account debit to provision. What amount you have created? 9 lakh. But actual outflow is was 10 lakh na. Means actual outflow will be 10 lakh. After 3 years you need to pay how much? 10 lakh. What is the difference? This 10 lakh minus 9 lakh is what? This 10 lakh minus this future value minus present value is what? Interest element. So what they want to say is this is known as compounding of interest. Means when 10 lakh become 9 lakh, this is counting of interest. So when we add interest, it becomes compounding of interest. This compounding of interest is nothing but unwinding of provisional amount. We call it unwinding. We call it unwinding. So can I say carrying amount of provision should be increased by the amount of interest, and that interest will be charged to PL as a borrowing cost. This interest will be charged to PL as a borrowing cost in SOPL. Understood what they are saying? What they want to say? When discounting is used, carrying amount of provision increases every year. Carrying amount of provision increases every year with the amount of interest. That increased amount is treated as what? Borrowing cost. And this will be charged to PL as an. Correct? Have you understood? Let me take one question based on this. Come to question number. Question Telecom Limited. Question number 10. X Telecom Limited has an income tax litigation pending for appellate authority. Legal advisor opinion is that X Telecom Limited will lose the case and estimated liability of 1 crore may arise in 2 years. The liability is recognized on a discounted basis. The discount rate at which the liability has been discounted at 10% and is assumed the discount rate does not change over the period of 2 years. How should X Telecom Limited calculate the amount of borrowing cost? Please, if I just explain the question number 10 we are doing. So in question number 10, can you say we are standing right now here, this is y0, this is y1 and this is y2. Correct. Because they have not given what? Date. So we can say this, suppose this is 31st March 2021, this is 31st March 2020 and this is 31st March 2023. Let us assume to explain. So right now we are standing at this point of time, and amount of expenditure is what, 1 crore. Amount of expenditure is 1 crore now, and the rate of discount they have given how much? The amount of provision will be equal to 1 crore multiplied by what? Present value factor at a rate of 10% for how many year? For how many year? 2 year na? 2 year, which is equal to what? 1 crore multiplied by what? 0.826. Can you give me 4 decimal? 8264 na? Calculate. 8264 coming. Calculate it. So it is coming what? 82 lakh 64,000. 826. 8264. Plus 4. Only 4 decimal. It become 82 lakh 64,000. Correct. Now one doubt will come from examination point of view. Sir, in some question you are taking 3 decimal, in some question you are taking 4 decimal. In some ICA question there will be 2 decimal. There is some rule of decimal. Correct. If suppose discounting factor is given in the question, then you need that discounting factor. But if discounting factor is not given, then you can use either 3 decimal or 4 decimal as the case. But whatever discounting factor you are using, that you should note down. Means if you are using 4 decimal, write down 4 decimal. If you are using 3 decimal, then write down 3 decimal. If you go for AFM classes, means previously SFM, now it become AFM. AFM teacher will say 4 decimal. So I also say 4 decimal. So can you see, if you increase the decimal, it will be more accurate answer. Normally from examination point of view, we say 4 decimal, but you can use decimal also. I say sometimes they are using 2 decimal also. But whatever decimal you are using, write down that decimal in your solution. Understood? Correct. I'll give a note for this, don't worry. But this become what? Amount of provision. Means can I say on 31st March 2021, based on this assumption date, I'm assuming that this date is given in the question. Means I can say Y0. I hope you are understanding. Date is not given, only for explanation I am taking this date, so that you understood that provision is created at the end, not at the beginning of the year. Provision we create at the end of the year. What journal entry will do? Journal entry will what? PL account debit to provision for legal damages. Legal damages na? It is how much? 82 lakh 4,000. 82 lakh 64,000. Understood? Okay, the next year, 31st March 2022, we should increase the carrying amount of provision with the amount of borrowing cost. What journal entry will do? Borrowing cost transfer to PL only. Account debit to what? Provision. To provision na? And that will be what? 82 lakh 64,000 into 10%. That is how much? 8 lakh 26,400. 8 lakh 26,400. The next year, 31st March 2023, 1 second will pass. What journal entry? Borrowing cost transfer to what? PL. Account debit to what? Provision. And can I say at the end of second year, at the end of this year, can I say the amount should be 1 crore? And I hope from CA Inter you know that the last year interest should be balancing figure due to approximation. What you can do, this plus this minus 1 crore. How much is coming? Is this plus this, then minus 1 crore. What amount is coming? Bolo. How much? 9. How much? 19,000. 9 lakh 9,600. 9 lakh 9,600. Understood? So this has been taken as a balancing figure. This has been taken as a balancing figure. Now the provision amount become 1 crore. The amount is paid will pass one more journal entry provision account debit to bank if the actual amount remains same. But in this question we are calculating this too na. Have you understood? I have just given journal entry to help you in journal entries. Nothing more than. Have you understood? Any doubt? Simple. Now, if you read solution now, they have given solution in some different way. But can I say answer remains same only? What they have given? The discount factor for 10% is 827, it 826. If they have taken 3 decimal. Now they have taken 3 decimal, we can take 4 decimal. Nothing wrong in that now. You can take 5 decimal also. But whatever decimal you are taking, write down that. So it will be initially recognized at 82 lakh 60,000. Okay, correct. Then discount factor of 10% at the end of year 1 is 0.909. So at year end 1, the provision amount will become 90 lakh 90,000. What they are doing? Just try to understand. We can do in that way also. This is Y0. This is Y0, I1. First they have created here 1 crore into 0.826. It become 82 lakh 60,000. Now when we are standing here, can you see the present value for 1 year will be how much? 1 crore into 909. So this will be what? 90 lakh 90,000. And at this point of time, it will become 1 crore. So the difference between these two is borrowing cost, and difference between these two is borrowing cost. So this is the alternative way to calculate borrowing cost. So either you can use these or these. Both are correct only na. So you can't say, sir, why you have done in that way. This is also correct solution. Your answer is also correct. I say solution is also correct. So one question can be solved in two different ways. If the solution remains same, so both are correct. Got it? This also you have understood. Unwinding of provisional amount. You have. Now use of provision. Just try to understand. So suppose you created one provision. You created one provision, but now that provision is no longer required. Can you use that amount of provision for some other purpose? No, we cannot use. Means the amount of provision can be used only for those expenditure for which it was actually created. If no longer required, it will be reverse. We cannot use it for some other purpose. Understood? So provision, what they say, a provision should be used only for the expenditure for which it was originally recognized. In other words, it cannot be used for any other purpose. Then coming to accounting treatment. Accounting treatment very easy. If related to expense, if the provision is related to expense. So when you create provision for recognition of provision, what journal entry? Expense account debit to provision. And when we reverse the provision, what journal entry? Provision account debit to expense. So provision account debit to expense. Very simple journal entry: expense account debit to provision and provision account debit to expense. My question to you all, when you are reversing it, provision account debit to expense, so you are crediting the amount to PL. You are crediting the amount to PL. My question to you, reversal of provision is an income or it's not an income? Reversal of provision is an income or it is not an income? Is an income or is it not an income? It is not an income. It is reduction of what? It is a reduction of expense. It will not be shown in the income side. It will be shown as a reduction of expense. Understood? Have you understood this? Have you understood this? Now, if provisional amount is related to acquisition of construction of asset, If provisional amount is related to acquisition or construction of assets, so can you say it will be added to the carrying amount of the asset? What journal entry will do? Asset account debit to provision. Then your journal entry will be asset account debit to provision. And when you reverse it, the journal entry was provision account debit to asset. Understood? Have you understood? So when it is related to expense, journal entry is expense account debit to provision and reverse of provision account debit to expense. When it is related to acquisition or construction of asset, then asset account debit to provision and provision account debit to asset for follow. Have you understood? Polare, you have not understood. Just try to understand. Have you done any time this type of journal entry in your life? Have you done this type of journal entry till now? You have not done. So how can you say, sir, you have understood? Because journal entry you have understood, but you need to understand when you do journal entry. I am saying asset account debit to provision. Said yes, sir, understood. But you need to think. So when this journal entry done, till now, so you have never done. Have you done this type of journal entry? Always you said PL account debit to provision. अरे बोलना रे. What I am saying, just try to understand. Whatever you have done in CA Inter, don't repeat it. CA Inter, you have not asked any question from teacher. Whatever said, you accepted it and you have learned that. Even though your teacher taught you wrong, you have done that. That only you don't know the meaning of real account. Your teacher has said golden rules, na, and you have never asked real account. Your teacher has also not explained, and even though they have explained, you have not understood. I know they will never explain real account. Means they will not go into that detail. Now, have you done the research of real account? What you got the answer first same? What is real account? One by one. Real account. Last class I asked you what is real account. What is your answer? Related to? You are giving example. You are giving example. I asked what is the meaning of real account. Hmm? Examples given. Meaning not given. Only examples given. Cash. Then the examples given. Please, can I say from that example assets are real account? Liabilities are real or not real? Liabilities are also real account. Oh, because you are thinking so much, it means till now that you have not understood only na. If you are thinking so much, if you are putting so much stress in your mind, is actually you don't know real account. What will happen if the same question has been asked in interview? And if you are not able to answer, will they ask the second question to you? They will never ask. They will have a doubt ki how you pass the examination. Am I right or not? I'm right. I'm right. 100% I am right. I am CA and you came here by becoming CA. So I have a right to ask any question. I need to answer that. What answer you got? Example. Means nobody has got a definition only. So I am asking some to say whether it is what real account or not. Intangible asset, real account. Correct. Inventory, huh? Borrowing is one thing you have not understood. Borrowing is not a real account. What is the meaning of real account? Real account. One thing though you are confused. You are confused or not? Real account are all asset of business except debt. That means receivable. Means all asset except receivable are real account. Is any amount which is receivable from any person that become personal account. So all assets are not real. Liabilities are not real. Liabilities will be always personal account. Every asset of business except receivable are real accounts. The receivable are receivable from any person that become what? Personal account. This is the meaning of real account. The meaning of real account. Now that you'll never forget. Real account means all asset of a business except receivable. Now any asset of whatever nature, if you have understood, that will be real account. But liabilities are not real account. They are always personal account. They are always personal account. So one more question. One more question. Purchase is a real account, nominal account, personal account. Purchase is a real account, nominal account, personal account. Purchase account, the real account, nominal account, personal account. You're not answering only now. Chalo, one day time. One day time. Search. You have Google Baba. You have seniors also. Ajay, have you asked this real account from your senior? You have done research in Google Baba. Google Baba. Ask sometime to seniors also. Now, what answer you are getting from there? That also you try to understand. And if they are not able to answer, and they are chartered accountant, so for becoming CA, for passing CA, perfection is not required only. Full lesson. It means if the CA is not able to answer what is real account, one thing is clear that for the passing CA examination, perfection is not required. Perfection is not. So what happened? One parent came to me. I'm just think this. What happened today? One parent came to me with one daughter. The daughter was not willing to, but the parent was forcing. The parent know the value of CA, but that student from commerce background, but not willing to CA because now watching you in YouTube, everyone is saying CA not what not profit making venture, profit making education. The salary is very less overall. So I just asked her why you don't want to become CA. Said that earning what 2 lakh per annum, 3 lakh. Understood now? So I said how much you want to earn? How much you want to earn by becoming anything? So 20 lakh per annum. 3 lakh to any CA can earn. Any CA can earn. 20 lakh is what? 20 lakh is what? Okay. Understood now? So I said I know many CA who are earning more than 1 crore. The 1 crore. Then I will do CA. Are you able to understand? Just try to understand. But the impression we are giving in the market. There are two type of CA available in the market. Because in any profession, everyone is not earning so much amount. If I say doctors, so all doctors are not earning now. There are few doctors who are earning crores. We can't count also. There are few doctors which I know, they are not earning that amount. All doctors are not earning. All MBAs are not earning. All engineers are unemployed. But there are many engineers who are earning crores. So all CAs are also not earning that capacity, that level. But there are many CAs who are doing wonders. Are you getting? Now the question is that which CA are not able to earn? That we need to understand. And why they are not able to earn? That we need to understand. We just try to understand. CA is one degree. Your earning depends upon your ability, your capability after becoming CA. So earning is not decided by becoming CA. The earning is what? The after effect of becoming CA. Are you able to understand? I know many chartered accountants who have taken multiple attempts but earning crore. And I know many CA who have taken one attempt but not earning good amount. I know rank holders who are not able to earn good amount of salary. Earning does not depends upon your CA degree. Earning depends upon your knowledge, your capability. Understood what I'm saying? So there are many CA who are actually chartered accountant, but they do not have knowledge. They do not have knowledge. So who will give money? No one will give money. No one will give money now. So we should not compare ourselves with those CA who are not able to earn. We are unique. We are not. We are different from them. Every teachers are also not earning. In every profession, there are two type of person: those who are earning, those who are not earning. Does not mean that profession is not lucrative. Understand what I'm saying? To understand that why they are not able to earn, because their knowledge is not up to that level. Why their knowledge is not up to that level? Because when they have done classes, they have done entire activities. They will give 10 lakh to you. बोलना yes or no? Means if you are not selected, it means you are not capable of earning that much amount. In their viewpoint, are you able to understand what I am saying? And just try to understand, if they are giving 10 lakh to you and you are capable of earning 1 crore, it means you should job, you should do your own business. You only say, Arey, if you are capable of earning 1 crore, they are saying, nah. Because no, because if I am paying to my employee, suppose if I am paying 10,000 to my employee, so he should be able to earn 1 lakh from 1 lakh from me. Then only I'll pay 10,000. 90,000 will be my saving now. Arey, bolna re. If I appoint a new employee, I think that by giving 10,000, if I can earn 1 lakh, so I will apply. Otherwise, I will not hire a new employee now. Bolna yes or no? Are you able to understand? They are giving 10 lakh. If you are capable of earning 1 crore, only thing, you should join a job or you should start your own business. We are not made for jobs. For initial year, because already I said the CI are actually for middle class family. Who are middle class family. I was also from middle class family. When I became CA, that time I was not having mobile, I was not having any vehicle also. I was also from middle class family only. Are you able to understand? So this CA is for us only. For surviving in the market for initial period, you can join job. But you are not made, not made. You are not employed. You cannot buy for entire year. We have that much knowledge that we can start our own business. A message I am giving: if if you want to become employee, at the highest post, then only okay. Come at what? Manager level. That highest post you should. Are you able to understand? Is that you should negotiate how much you want from that company. Then be in that company. Otherwise, no, no. But the message I just want to give. Time is also over. But can you say, when I was doing this point, you said understood. It means actually you are not here to learn. You are only thinking, yes, we have understood. It is till now we have not done this type of example in our life. As a student, you said, ask me, sir, give me an example. Should ask or not? Or I should create an example. Because I will create. As a teacher, I will create. But you should also ask if I am not creating. Just write down. I will only create one example, but not right now. I don't refer in day 6. I will only come back to this point, don't worry. I'll come back to this. You can see only one point is left, restructuring, but let me complete this scope, and this disclosure part. Correct? Scope. The scope means in day 37 is not applicable to what. Normally, scope is the first point of any Ind AS. But at the beginning, you don't know about Ind AS only. How can I teach you? So now you'll understand Ind AS 37 is not applicable to executive contract unless onerous. Now you know this is not applicable to executive contract unless it is onerous. It is not applicable to any financial instrument. Financial instrument means not applicable to financial asset. Financial asset means example you can say debtor. Already in my initial class that I said decline in the value of asset is not covered in this chapter. Provision for doubtful debt which you say in CA Inter that is not covered where? In India 37. That is impairment loss. Impairment loss is not covered in this. Income tax, yes, income tax is also a type of liability, but for that we have a specific Ind AS 12. AS 22 now become Ind AS 12. Employee benefit, of course, for employee benefit also we get provision, but that is covered under Ind AS 19. That is specific. Insurance contract, any obligation arises. Insurance contract for insurance company, we have a specific Ind AS 104. But good news is that this is not in our syllabus. This Ind AS 104 is not in our syllabus. That's why. So soon Ind AS 117 is coming. It is under drafting. Once it is effective, that will be a part of your. This is for insurance company. Right now for insurance company, Ind AS is not, and therefore this is not in our syllabus. It is also not applicable contingent consideration arising in combination separate chapter. There will do. What is this point? Will that particular chapter it will be covered under Ind AS 1. Hope you have understood. Then disclosure for each class of provision. For each class of provision. We should disclose a brief description of the nature of obligation. Write down what is the nature of obligation. Correct. An indication of uncertainties about the amount or timing of those outflow. If there is some uncertainty, the fact. The amount of any expected reimbursement. Any reimbursement should be disclosed. Stating the amount of any asset that has been recognized for that expected reimbursement. Suppose reimbursement is virtually certain, you have already recognized that also you should disclose. You have recognized. For each class of contingent liability, a brief description of the nature of contingent liability. Nature of contingent liability should be disclosed. Wherever practicable, an estimate of his financial measure the amount. We also discuss the amount of that contingent liability. Correct. An indication of uncertainty relating to the amount or timing of any what outflow means if there is any uncertainties for contingent liability that should be also discussed. The possibility of any reimbursement, if there is any possibility of reimbursement for liability that should be discussed. For each class of contingent asset, a brief description of the nature of contingent to disclose. An estimate of their financial effect wherever practicable can be measured. An estimate should be also given. Where any of the above information required is not disclosed because it is not practicable to disclose. Amount cannot be estimated. Facts should be correct. When any of the above information cannot be disclosed because it is not practical to disclose that, then the facts shall be stated. Facts should be difference भी कर लेते हैं. Difference between Ind AS 37 and AS 29. Already I have discussed this point. Is constructive obligation AS 29 is silent but Ind AS 37 specifically deals with what? Constructive obligation. Discount, can I say AS 29 is silent about discounting, means discounting is not permitted under AS 29, but Ind AS 37 is this permitted if the time value of money is material. However, there is one exception to this rule under AS 29. Only one particular situation AS 29 permit discounting. That situation will discuss under in AS 60. When AS 10 was revised, na, because of AS 10 revision, AS 20 for the that particular case I will discuss in AS 60 property plan and equipment. Contingent asset AS 29 says it shows in the report of approving authority, but in AS 37 says shows in the notes account in financial statement. Onerous contract point I have not discussed. But India 37 says that there's any onerous contract, and in that onerous contract there is some assets, some the property, plant, and equipment. Whatever example I have. So for that machinery, first we need to calculate impairment loss as per respective, and then recognize what provision for onerous. Understood what they want to say? It requires recognition of impairment loss on the asset dedicated to such contract before any provision is created as per. So any asset which is dedicated to that onerous contract, first you should calculate impairment loss based on respect. Then you should measure the amount of provision as per. So right now we don't know about impairment loss. Automatically covered under India's 30. If I don't refer what? Refer India's 36. However, AS29 is silent regarding this. AS29 totally silent regarding that. The four simple difference apart from this AS29 and India's 36. Only one point is left. What is that point left? Restructuring. Apart from that, we have done what? AS37. What I will do, I'll just transfer the PDF to you. Start reading. But today this much only. Thank you very much. We'll see you tomorrow. Till then, bye bye. Take care.